Hey guys, welcome to my presentation for the Owl Group Research Weekend 2023. Griffin Cooper here, and this topic is going to be about options expected move, also known as OEM, and the preliminary research and trading for intraday reversals of SPY using the options expected move. So just as a quick precursor for what we're going to go through, we're going to review the uses of options, implied volatility, what the expected move is, the outline of the project, a provisional trading plan we've been using, our preliminary research results, some insights and lessons learned, as well as plans for the future. Let's dive in. This is just kind of give a review, top-down look at how options are used in the market, and the two main things, the two main uses that options have are really against hedging against movements or the volatility of a stock, as well as speculating, on movements of a stock as well. And what that brings us to is then this concept when we're using options of implied volatility. So it's this idea that as options, just kind of like a regular stock price, as option buyers pay more or the sellers demand more, the prices of the options increase, right? Just like regular stock prices. So this leads to a higher implied volatility. The higher implied volatility is larger, then leads to larger expected movements, right? That's pretty much what it means. A good definition that I found is the expected magnitude of a stock's future price movements as implied by the stock's option prices. So we're kind of forecasting or giving an idea of what we think the expected move is using usual Gaussian bell curves of one standard deviation, for example, to see what the stock's future price movements are implied by the stock's option prices. That's pretty much what the implied volatility is. So we move on then to the concept of option expected move, or OEM, and it's really the one standard deviation expected price range for a stock in the future. For example, if we look at a stock's 30-day expected move is plus or minus 5%, then what that means is that the stock's price is expected to be plus or minus 5% from its current price in the next 30 days, giving a 68% certainty using normal descriptive statistics. So the general application of this is that option expected move can be used to estimate the expected movement of a market over a given time period. We were just talking about implied volatility, so what's the difference between that and the expected move? The expected move just also actually adds that time dimension. So the implied volatility gives us certain distance, and then with expected move, we also add this dimension of time. So there's really three variables that go into calculating a stock's expected move. We have to look at the current stock price, where it's at right now, the stock's implied volatility, which we talked about, and then with expected move, the desired time frame for the expected move. Well, why is this important? Why do we even care about this? Well, if we look here at a chart of from Thinkorswim of this is options on SPY, we can see there's massive amounts of money at these OEM levels. If we look here at the open interest of these levels, there's tens of thousands of options here, right? And look at the volume, it's huge. So market makers are very aware of these price levels because it's what they priced in ahead of time. So the reason we care is because, for our trading for the Owl Group is that if prices breach these important levels, it forces these dealers to sometimes defend their positions, and there's going to be important things at these levels, and that's where a greater than expected move can transpire, which is pretty much the same thing as our critical state, right? So this is an example again of the SPY option you can see the lots of open interest, lots of volume here at these price levels for the OEM. If we ask the AI Bard, which is expected. Options expected move, a better approach to future price movement than historical data. The AI has some interesting things to say in general that he thinks there's an idea here that it is better than historical data. At least another kind of way I think of viewing it would maybe be a better assessment because it's looking at the measure of the market's expectation for the future rather than the historical price data, which is looking at the past. It's kind of a price that's priced into the future movement of a stock, which can give us another angle for observing the elephant parts, if you will. Part of another reason why expected move is good is, like it says here, we're looking at the volatility and being, traders, we love volatility. So anything that kind of takes that into account, I think, is something that should be looked at when the measures are so based on volatility. And it's forward looking. Of course, we know this is not, expected, is not perfect. It's going to be just like any other kind of trading. There's uncertainty, there's volatility, complexity, all those fun things, the noise of the market. But even with these limitations, anything that's talking about a 68% of the time edge, whether that actually happens 68% of the time, the idea that there's going to be critical states at those levels with people defending it gets our attention. So based on that research, we came up with a provisional trading plan that we started back in the beginning of October. The main objectives of this simple plan were just to get an initial impression and some possible insights out of monitoring these OEM points of the market, SPY, ETF, if you will, to S&P 500, and to then just start to get in there and trade some of it, to see what that did, what that felt like, what the results were. So we looked at just trading the failed breakouts as they occurred on an intraday pattern in the usual way, meaning with just simple kata challenge type entries and exits. And we figured by getting some experience at monitoring these levels, as well as how the market behaved on the rest of the market and in itself, we hope to get some insights on how to apply and use these OEM levels in the future. So just the provisional trading plan was originally just for a week. It's been continued now for 6 months. And we're, again, looking just at the symbol SPY to kind of get a view of the larger market and how it's reacting at these levels. And the plan is just to record these OEM price points for the next day's session after market close. And then the next day, our trading plan is just to trade the reversals when the price hits these levels and fails. Same one. Okay. So if we look at the data collection sample, this is for what the first week looked like. Basically what we did is we just took our Thinkorswim trade tab, and each night we would go here. If you look at, this would be the expected move for the next day. SPY has options that expire daily, so we can get these intraday OEM levels. And so if you look over here to the right, it calculates it for us in Thinkorswim. So we have 3.287. So basically what we'd do then is we'd record the closing price at 429.54 and add or subtract that number of 3.287 from it to get these OEM levels. And then we just started recording if it hit those levels or not, and as well as what the trade results were. So to do that, basically just from an operational standpoint, we were setting alerts on a daily chart. Here's a daily chart of SPY, daily bars, and you can see here we would just set the alerts each night for the lower level and the upper level OEMs, and then each day we would update these alerts to see if anything triggered. So it was very simple process, very easy to trade. And one thing we noted just by doing, it's funny how as soon as you start just doing little things and actually doing it, the kind of insights you have. So because the levels are they go the exact, they're symmetrical from the closing price, right? They go the same amount up or down, which makes it interesting to see how on a day like this day, for example, it was interesting because the market closed at the top of its range. So then you see the OEM levels as opposed to being, at the bottom here at the low of day, which is a resistance point we would normally look at, the low of day. The OEM level is about midway through the bar, making that an interesting now new possible support level. And sure enough, next day, if you look at the low of the next day, it was almost right on to where that OEM level was. And it's just another insight of how we can start to see these levels as important support and resistance. So this is just an example of one of the tests and the trades, what that looked like. This was from a Monday where you can see this gray horizontal line is our OEM level on the upside on SPY, and here you can see price reached that point. There was only about 45 minutes left in the session, so less than an hour. So if we look at our context of using, time, will, pattern, money. In this example, the time factor was almost gone, right? We only had 45 minutes left in the session. Nevertheless, we did trade it, and we saw, just a simple, again, we just kind of used the simple sniper kind of rules, or Kata challenge PSAR flips. So when the PSAR flipped, we entered a short. When it failed here, with a stop at that RL10 swing high where the PSAR flipped to the downside. So just the normal entry, and it wasn't surprising to see price get rejected there, that someone defended that level, that it was a viable resistance level, and so it really was just an easy supported fall crossing kind of pattern. Now, we closed the trade at the end of the day. This is intraday trade, so we weren't holding anything overnight. There wasn't much time left in this example because it was only a little bit of time before the end of the session, and my time zone, it ends at 1 o'clock, so you can see it ended very shortly after it. And that then leads to other questions. We started to see, is there a certain time of day that these OEM levels are typically hit? Is it often near the end of the sessions? And if it is near the end of the sessions, maybe perhaps there's levels that can be applied to swing trades, which give more time than the intraday trades that won't have much time left, that they're usually hit at the end of the levels, at the end of the sessions. This is an example from a Thursday where this time the lower OEM level was hit. So you can see here, it was earlier in their day as well as coming out of the morning session after this huge, beautiful move down. We hit this OEM level below yesterday's low at this, again, the dark gray horizontal line. This one is interesting because you can see how these levels aren't really set in stone like pretty much any support and resistance level. It continued down past that level about a frog box or so before reversing. This green line is I think it has an R3, or it went down about an R3 or frog box. So still, to me, within the levels of kind of noise, these aren't hard levels, but more kind of like a chain link fence you're going to bounce off of, right? So we see here, after that bounce and kind of hitting another support level from a couple days ago, it did reverse, and that was another easy kind of SSC type trade. We see the bounce down, and then it did reverse here, and when that PSAR flip, we just got in the normal way with a stop at the RL10 swing low. And in this example, you could see we just took kind of a nice little piece here, a nice trade where this is again a time exit. Actually, it was heading towards the end of the session, so we just exited again. And it's, at this point when you start to see some patterns like that, it's starting to look like this could be a reliable reversal pattern, that these levels do actually seem to mean something in our studies. This is another example of the possibilities of when it works really well, what it can look like. This was an interesting case study as well, because this horizontal red line was the OEM level. It was also the low of day from yesterday. And so what happened on this day is the market actually opened below the OEM level, and the follow through is that it led to a really successful morning hook. If we see the close here, the big gap down, and then it just, had a really nice morning hook kind of day where it just rallied, past even this level for just a real simple trade. We just, again, entered at the PSAR flip, looked like a, picture perfect SSC, exited at the PSAR flip. Doesn't get much easier than that. So we're starting to look at maybe these kind of OEM indicators when it opens beyond those levels could really be and maybe this could be an indicator for a higher chance of these kinds of morning hook days. And certainly if this was happening in the broader market, you can imagine with stocks and symbols that have more volatility, that move more, what they looked like on that day. This is an example of a good example of kind of when the trades don't work, what it can look like, just to kind of to observe the price movement. This was one where not as harsh of a sell-off, just kind of a nice orderly move down. And then here's that horizontal line with the test. We went long again, just in a normal way at the PSAR flip, got stopped out. And what's interesting is just if you look at all this fighting, it looks like sometimes it did end up going this time to the downside and closing outside it, which doesn't happen often, we've seen, but just you can see it sometimes there's can be really some whipsaws on some of these days to be aware of with these intraday time frames kind of before the the winner gets sorted out. So in summary and conclusion of you can see we've only been observing this for a month so far, but if we look just at our initial observations, the OEM level was actually tested on 11 out of the 15 days we watched it. So that's 73% of the time. So it gets tested a lot. Is this typical behavior? Is this true in quieter markets? October was a volatile market type for most of it. So we plan to keep researching this for at least the next 6 months to see if that's still true. If we look at the trade results, trading these really simple reversal patterns is showing, with a small sample set, but initially showing a 75% win rate, which suggests that we should do further research. If it was showing a 10% win rate, I probably wouldn't want to keep looking at it. But I found that, when things have large statistical changes, you don't need as large of a sample set to kind of see the change. We don't have to do 1,000 trades to know if there's maybe something there or not. I believe there is something here to observe further. So I think a larger assessment is going to be done when more trades are completed. Right? We have an actual statistically significant sample set, but I thought it was interesting enough to present for this weekend. And we're going to at least plan to conduct this research until April, which will be about 6 months to gain more statistical significance and observe the behavior in the changing markets. But again, as you can see, if you look at this column here, the trade results, the green ones are winners, the red ones are losers. So it looks like there could be something there. So in conclusion, trading these reversal patterns is right now showing a 75% win rate, which suggests that further research should be conducted. A larger assessment will be done, more trades are completed, and we're going to keep going, for at least 6 months to observe, the behavior in these changing market types, which will occur naturally. So in conclusion, the initial trading shows that the OEM levels could be used to trade reversals intraday using just these standard professional trading techniques. More data is going to be needed to make a better conclusion. At least 6 months of trading sounds right to me. And that there could be other uses, I think, for these levels. 2 examples I've thought of is finding reversals in other more volatile symbols. When SPY hits the OEM reversal, we can look at something that's sold off even more if let's say it hits the lower level to set up an SSC trade in the broader market. And maybe SPY has gone down 3 risk boxes. Well, what about some of our other tradable symbols that are down 10? If that hits that reversal and 50% of the market movement is from SPY, that could be a good edge in our favor to take that SSC. Things like that are what we're going to keep investigating. So, and then as well, since we've noticed that sometimes these OEM levels are hit near the end of the session, maybe not so useful for intraday trading, but that can have other broader applications for swing trading, some kind of maybe filter or something to use to inform our swing trade decisions. So I hope that was informative, and thanks for watching.